Good morning, good evening, and good afternoon, everybody. Hope everybody is having a fantastic day. As you can see, I am not at the house, but I am here, which is very important. Today, we have high probability short term profits with the one, the only Mr. Mike Wade. First up, we're going to go over a quick market review. Then, we're going to talk about a couple little news updates that we have going on, some big news with I won't spoil it. But next up, we have last show's trade. And then we're going to talk about two, maybe, live trades. I didn't ruin that surprise, did I, Mike? And then we're going to go over some audience stock, some of your Q&A. Let's bring Mike in. How you doing, Mike? How's it going? How you living down there in Costa Rica?
Hey, buddy. Good morning. Yeah, it's great here in Costa Rica. I show this every now and then, and that's my view from my trade desk here in Uvita, Costa Rica. It's great.
Yeah, I'm so sorry for you. I'm at the beach right now, and I'm still jealous of that view.
Where are you now? You're in South Carolina Beach somewhere?
Yeah, Fripp Island. It's down in it's like right under Charleston, South Carolina.
Mm-hmm. Have you ever been to Charleston? I'm sure you have. I have.
Oh yeah, love Charleston. Great city.
It's really beautiful, apparently, right?
Oh yeah, good barbecue there too.
I like me some barbecue. My dad is from North Carolina, so I spent a lot of time in the Carolinas and including South. But barbecue is a big deal in Carolina, in the Carolinas, man.
They take it very seriously here. All right.
Yeah, man.
Let's go over a quick market review.
Hey, you know what we're going to do that's kind of a little different is we're going to start with that stock you mentioned, NVIDIA. NVIDIA, oh, have you seen NVIDIA? NVIDIA, the tattooed AI stock. It's a song by Groucho Marx called Lydia. That's my world. Inside my head, when I see NVIDIA, that song goes off. So it's a little crazy, but hey, Ryan, they're the biggest company on the planet.
That's crazy. Just we were talking about this before. Just 2 years ago, we were looking at this, and NVIDIA was nothing. We were excited about the new graphics card that they'd pop out, or something new in tech. But they were a cool company, but they were nothing. And now they're eyeing $4 trillion.
Well, what? Good God, that's like maybe a fourth of our deficit in the United States. I mean, that's a huge number. And I'm going to go. I'm going to use this to kind of parlay into the market review. So I'm going to actually, before I even show the SPYs, let me show you NVIDIA. This stock is on fire. We've been talking about NVIDIA from time to time. We mention it quite a bit, but NVIDIA split 10 for 1 back up in here. And, prior to the split, this would be what would that be, times $1,350 a share pre-split. Now it's at $135. And the stock post-split has been dribbling up. And part of the reason I think that the stock is rising is because it's the darling of the stock market. It's the most sought after company. They're killing it on earnings. They have the best AI products, apparently. And it's just taking off. Retail traders have come in and propped the stock up. And imagine you're a retail trader pre-split. This stock would have cost you $1,350. And now a retail trader wants to join the party, and they can now because they can buy a share for $135, not $1,350. And so that's part. And we've been talking about that a little bit. Retail traders come in. The price is 1/10 of what it normally was pre-split. And I would attribute a lot of this to retail traders buying the stock at a discount. So NVIDIA is off to the races. All of these here, everybody, all-time high. So today, yesterday was a holiday. So on Tuesday, the stock closed at 135.58. So NVIDIA is running hard and taking the Qs, the NASDAQ 100 along with it. So here's the NASDAQ. All-time high on Tuesday. We'll look at the futures here in a minute, and the SPYs as well. Just reaching for the stars here, y'all. All-time high on Tuesday. Now, one of the reasons that the SPYs and the Qs are sensitive to NVIDIA is because NVIDIA is the third most weighted stock in both of those indices. And so NVIDIA, in part, is partly responsible for the markets running to all-time highs. And just taking a quick look at the futures here, this is CNBC. Here's where the NASDAQ futures are due to open, up 0.3%, S&P up 2%. On the Dow, though, not so much. Not so much on the Dow Jones. And I can show you what the Dow looks like. The Dow's not setting all-time highs. All-time highs was over here around 400. And the Diamonds is an ETF that tracks the Dow Jones Industrial Average at 1/10. So all-time high territory on the Diamonds, on the Dow itself, right around here was 40,000. And so the Dow hit 40,000 and it has retraced. But what's curious is that the enthusiasm in the Dow is nowhere near what it is in the other two indices. And I'd say primarily that's because the Diamonds, the Dow does not have NVIDIA in it. All right, so we started today with NVIDIA for our market update because it is a major catalyst for this bullish run that is about to continue when the markets open up here in about 9 minutes. So that's the complexion, Ryan. It's it's definitely a bullish market. I don't see any reason for it to stop. The jobless claims number came in this morning higher than expected, and the markets are responding in part, as you expect. The market is pining for rate cuts. We'll get one probably by December, maybe sooner. And if the jobs data and the CPI and the PPI, the inflationary reports, in other words, start reflecting that inflation is abating, then we could see rate cuts sooner than December. So that's what all the market traders are looking for. And anyway, bullish, man. It's a bullish market. You don't need to come to this show to see a bullish SPY in NASDAQ. All right. Now, we had a few trades on last week. Here's our current open portfolio. We have 3 trades open, and we did Tesla last week as well. Let's go through some of these trades here. This was on five below. Now, we placed the trade because the stock came out with really terrible earnings, and the stock tanked. And this happens sometimes. We got in, and the stock rose after we got in, put ourselves in a bit of a bind here a couple of days later as the stock starts running up to 125. As a reminder, what we sold on June the 6th was a 125 call and bought the 130, creating what we call a credit spread that makes money anywhere below this 125 level. That's our potential profit in the trade, and this is the risk. So yeah, big risk, small profit. In this case, a chance to make 11% on this trade, but probability of profit is very high. So there's this continuum of profitability. Let me get my hands on the screen here. Profitability and probability, and they're inversely correlated. And so our system is similar. I like this analogy because it's real world. It's like the movie Moneyball, where they built a team based on players that got on base a lot. Not the players that had the best batting average, but the players that got on base the most. And if you get on base and get on base and get on base and get on base, regardless of whether you hit the ball or not, then you're going to make runs and win games. So sniping is about getting on base. Take a little bit with super high probability of not getting struck out. And the run rate we have in this system over the last couple of years doing these trades live is 90% wins and an average profit of 10% every 7 days. That's the ballpark. It's consistent. And believe me, if you can make 10% every 7 days, you can take the same money, do 4 trades in a month at 10% average, and you do the math. It's a really substantial monthly return. Okay, so that trade ended up being a winner. Even though it got a little hot up in here, the stock did finally retrace. It bounced. Look at here. It bounced. You know what? I'm going to get I get religious about this because to me, it is so exciting. Let me show you the power of what I call lines in the sand. All right, so let's find 5 below. And we we ended up selling down here at 125 because we couldn't get any credit at 130. So we sold right here at the tops of those bars. The tops of those bars corresponded to 125. So please kind of hang in here and get this very valuable piece of information about technical analysis using support and resistance to derive where a stock may or may not go. So look, we got in here, we got our credit, the stock came up, and then, oh my God, Five Below is recovering, and then look, the top of the bar there is at 125, resistance. And then it came back away and it tried again. Can I get above 125? No. And then it fell away again. All right, so these resistance and support levels that I call lines in the sand are your best friend in the sniping game. I would say even more so, if not your best friend, your second best friend in any trading system. And the reason for it is that these support resistance levels exist at round numbers. Round numbers. If I just, let me just pull up my, get a line here and I'll highlight this. So you can see up here at 150, support, resistance. And then you drop it down to 140. Look at this, support, resistance. You drop it down to 130, which is where I wanted to sell in the beginning because the stock bounced off 133 times. So these lines in the sand are derived by human beings that think in round numbers. Institutional human beings that have a lot of money to trade, and they use computers and they tell the computers when to buy and sell with round numbers because we don't think in ratios in our human brains, we think in round numbers. So that to me, of the most valuable thing I could give somebody based on I started trading in 98, whatever that is, 26 years, quarter century of trading, the thing that I love the most, and even to this day, I get excited when I talk about it because it's so reliable, is support and resistance at round numbers. Support and resistance at round numbers. Get to know it. In this case, that helped us make a 10% profit on this trade. All right, off my soapbox, but it's so exciting and so important. Lulu, we placed a trade on 6/6. We had a bullish prognosis on Lulu. Lulu, because they had a branding officer that came in from, I forgot what it was now. I forgot the news. Oh yeah, I know, now I got it. I was thinking of another trade. So here, Lulu came out with really good earnings. The stock went up and then it dribbled away, as sometimes happens. Even the news was good. Sometimes the stock dribbles down, which is why we placed our line in the sand at 295. The stock started approaching, and then it bounces on this day. That happened to be, that was Tuesday. And currently in this trade, we are at our close point. So Lulu closed on Tuesday. We closed this trade for 4 cents with our entry credit of 41 cents. So that was a really nice 19% win on Lululemon. And then we got into Tesla last week. And Tesla, let's take a look and see where it's at today. It's still in good shape. We have to wait a bit more. But hold on a minute here. There we go. Tesla is in really good shape. The stock is meandering up here. We're still in good shape as long as the stock doesn't drop below this level here, which is 170. Mega strong support. This trade looks destined for a profit as well. All right, so let's lean on this NVIDIA bandwagon here. Oh, before we do that, Ryan, let's talk about our guidebook. All right, so I'm using risk graphs and lines in the sand and talking about credit spreads. We buy a leg and we sell a leg. What is that? How do I manage that? All of that, ladies and gentlemen, is in this sniper guidebook that I wrote. It's a 5-step process. Every Thursday at 9:15 Eastern time, I go through live trades. It's a little bit fast, so I wanted to make it easier for you to hang in here with me on Thursday mornings to play alongside me. And the guidebook is free, so grab it. It's free. Grab it. Take a read. Lots of graphics. Easy to understand, I believe. and come join Ryan and I every Thursday, and you two can take the power of this sniping and put it in your hot little hands. All right, now NVIDIA. NVIDIA's in the AI chip space. Here's another company. We got a little graphic here on ARM Holdings. ARM Holdings is in the AI chip space. 99% of their chips are used in smartphones. And before I get to ARM, let me show you Apple. So Apple is another really good bullish sniper candidate. But here's what happened. Apple came out here and gapped up to recent highs well above 200. Apple announced that it's going to embed AI chip technology and software technology in future versions of its iPhones. iPhone 21, whatever it is, will have AI. And you'll have to pay more for those phones. And so Apple is off to the races. All right, so the Apple on this day here would have been a really good trade. So Apple gapped up on the news. It's dribbled higher. So Apple's running really hard. And guess what? ARM is going with it. Let me show you ARM here. So what I love about this one, and good, ARM's down a little bit. That's what I want to see. So this is a live chart of ARM. In the AI chip sector, 99% of its technology, 99% of smartphones employ their technology. Here's what's amazing about it. Back here, this is right after one of their first earnings announcements. They blew out their earnings. Just a really strong company, really embedded with all of, many of the chip manufacturers around the world, the AI chip manufacturers. The stock gaps up, hits 160, and then falls away. Then it takes a strong run. It comes back up to 160, bounce. Well, we could say that's almost a bounce. Bounce off 160, bounce off 160, close on 160, and then right as it breaks above 160, this 1, 2, 3, 4, almost about a 4.5 month high, all-time high resistance level. Some people call those basing patterns, and the stock gaps up on above average volume. Let me show you the volume. This is another important feature here. When this happened, there was above average volume, well above average volume, as institutions came in and sopped up ARM stock. Now, what's great for me, this when you see a 4-month basing pattern where stock breaches it to all-time highs on well above average volume, then that is a sign that institutions are buying the stock. And now what I see is the stock's coming down a bit. I would be, I'm surprised all the time in trading, but that institutions would all of a sudden bring the stock back down below 160 after that day there, Tuesday, is possible, but not likely. And so what I'm looking at here, and I'm liking that this come down a bit, is I'm going to come in here. I could sell at 160 or set my line in the sand at 160, but given it's coming down a bit, we could drop it down to maybe 155 or maybe even 150. So let's just see. Now again, let me just really sink the hook here. That 160 is likely to hold. It might not, but it's likely to hold. So I could sell at 160, but given there's a little bit of a retracement here and fairly, what are we down? We're down about 5 points or so. A little bit of profit taking, nothing to be alarmed about. But why don't we give ourselves a bit more wiggle room, and let's see if we can get a trade on this sucker where we make money anywhere above 150. And again, the stock's not likely to come below 160, but if it does, we've got 10 points of margin, a little bit more safety in the trade, and in the event there is a bit of a pullback. All right, so again, our catalyst is here. Our catalyst is right there. The high volume, all-time high close above 4-month resistance, all-time high resistance. Okay, now I don't know what we're going to be able to get, so I've got to go look. So let me do that. I'm going to hop into a simulated live trading environment. I'm using Thinkorswim. I teach with Thinkorswim because their environment is really, really good. It helps you all see how you trade these things live. So I want to trade this live right before your eyes. And I've got arms selected. And if you're a Thinkorswim trader, I'll give you a couple of tips. Click trade, type in the symbol, and then you can take a look at the different expirations that are available. I start looking at 14 days, but if I can get an 8-day trade, I'll get that too. 1 day, tomorrow expiration, not likely. You can look, but let's just take a look here. So June 28th, this is a week from Friday, week from tomorrow. What can I get by selling a 150 credit spread? All right. Now look here, it shows 4 cents. Okay, so that's the mid price, 4 cents. Not quite enough money. So then I'll go to the next week out, July 5th, and I can see there, good God, I can see 26 cents, 24 cents on this trade. So here's what I'm going to do right before your eyes. So we're going to sell the June 28. I was going to do the 157.50, but now we can go lower. I'm stepping further away from the heat, selling the 150, buying the 149, and this is going to be July the 5th. I got to change the date here. All right, so I'm just trying to give you a screen so you can follow as easily as possible. So we'll sell the July 5 150 puts, and then we're going to buy the July 5 149 puts. I'm not in any rush here because the stock's coming down. And we're going to try to get, let's see, we got 50 cents there. 20 cents, it's vacillating around. And this is the best time, y'all. In the mornings when things are moving, there's a lot of option traders that come in, retail traders, lots of orders. And you can grab more money in the first 30 minutes, certainly the first 10 minutes, than you can the rest of the day. More premium, more implied volatility is how us option geeks talk about it. So look, 32 cents is available right now. Okay, before I do this trade, I want to talk to you a little bit about position sizing. And out of the guidebook, this is right out of the guidebook, I want to calculate my potential return on investment, and I want to calculate how many contracts I want to do in order to risk no more than $500. Okay, so in this hypothetical example, traded live, simulated trade, live trade, I'm assuming $500 represents no more than 3% of my entire portfolio's value. So position sizing is huge. Don't back up the truck because you're so certain the trade's going to work out. Make sure you insulate and isolate. Risk no more than 3%, because if all heck breaks loose and you take a max loss, you still have 97% of your portfolio available. Cardinal rule number 1 in trade management is position sizing. So all of this is out of the guidebook, and I just wanted to walk you through the math a little bit so I can figure out how many contracts I want to do. All right, so I think we can get probably 25 cents. All right, so I'm going to make this 25 cents. So if I have a $1 spread, and what I mean by that is the distance between both strikes is $1. Look, as I'm talking, the credit's dropping away. So if you like to trade, you can play with it. You know what to do, most of you that come here every week. So the spread width is $1. The credit is 25 cents. So the max risk in the trade is the width of the spread, $1, minus the credit, 25 cents. So the risk in this trade is 75 cents. Okay, so if I can make 25 cents risking 75 cents, my max ROI is 25 cents divided by 75 cents, or a 33% potential return on investment. What? Yeah, that's pretty awesome. Now, my max risk in the trade is going to be 75 cents, which equates to $75 per contract. And at that at that level, if I did 6 contracts at $75 of risk a contract, then my max risk is 450. So I could do no more than 6. If I did 6 and I got 25 cents, then my risk would be 450. Okay, so that's right out of the guidebook. So please grab it. It'll make more sense once you grab it. All right, now I'm seeing 18 cents here, which is still good. You got in, Brian said before, put your trades you want us to look at in the chat box. We'll take a look at them. And if you're getting filled on any of this stuff in a simulated environment, because I'm not recommending you trade real money. I'm not recommending that you trade real money. That's up to you. But simulated, certainly, let us know if you're playing and if you get filled and at what price. That'll be fun. Okay, so now I have 18 cents. I'm going to see if I can get 18 cents. I can still do 6 contracts at 18 cents. So I'll change my contract sizes to 6, and I'll put it up to 18, and I'm going to do a confirm and send. And then under monitor here, I can monitor the trade. And we just got 18 cents. So that trade, as you can see here, we sold the 150 put, bought the 149. We sold for 268. We bought for 250. We netted. Our net credit on that trade, 18 cents. And the good news, ladies and gentlemen, is that provided that this stock does not drop below 150, we're going to make our money. How much money? Well, the spreadsheet says 22% by expiration. All right, Ryan, that's a good one. I like that one.
Agreed. That'll be a fun one.
Yeah, and the way you handle these, I haven't mentioned this, but the way you handle them is you set a GTC order. I'll show you how to do this. I haven't done this in a while. But what I'll now do is, given that I just got 18 cents, I will create a closing order. So I'm going to create the opposite order that will flip the battery in backwards and buy back the short 150 puts that we sold and sell the 149 puts that we bought. And I want to have that spread price be 10% of my sell price. I got 18 cents. Let's round it up to 20 cents. I'm going to buy this spread back for 10% of that, which is 2 cents, and then specify good till cancel. Confirm and send. And then all you got to do on this sucker now is just let your profit stop execute when it's time. And that's it. Stock goes sideways or up or stays below 150 at some point during the life of that trade. If those 3 very probable conditions happen, one of them, then you're going to be out of the trade sooner than later and nab a really nice little profit. So that's handled. Profit stops are already taken care of. Your only job at this point with that GTC order placed is to just keep an eye on the stock. Let me go back to the cool hub charts that I like so much. And you just keep an eye on the chart, and then provided, look, it's already starting to bounce here, Ryan. So that's going to be good for us if it continues to make new highs. We'll get out of the trade sooner than later if the stock rises. And then again, GTC order will take care of all profit conditions. And then all you got to do is keep an eye on the stock. And if it closes below 150, you take it off for a contained loss. Simple. Rules-based, discrete, objective. No room for faith and hope. Don't invite faith and hope to your trading partner. Those women will mess your party up. Just rules. Take yourself and your gut feels and your opinions out of the picture. Just the rules. And that's all we've done for 2 years. And our win rate's 90%. Average profit 10% every 7 days. Boom, boom, boom. Get on base. Get struck out once out of every 10 times, and then let the runs stack up. All right, Ryan, do we have any other trades that our beloved constituents would like to take a look at today?
Earlier, George mentioned Mike Cava.
Hmm.
Put bull put at 87/86.
Is that
Point.
George?
Yeah.
George is a good trader. When George speaks, I listen. Interesting. Now, what's interesting about this one is the stock has, and I don't call, this is what they're called, basing patterns. And so the first thing my eyes see, I've been doing this so long, I don't even have to think about it. It just happens. 95 resistance, 95 resistance, 95 resistance, 95 resistance. Today it's closing above. Now, what a lot of people tend to do, and I think this might be the case, is you want to make sure the technical. Let me say it this way: technically speaking, it's interesting, right? The volume is already pretty high today. The stock is above 95. All right, so technically speaking, probably a pretty good deal. But if you want extra probability, like we've been doing consistently, you want to make sure there's a news event. So I want to check to see, is there a news event? And George, if you know what it is, type it in with your inquiry. But let's see. Today, was there a news event? Not seeing it today. 4 hours ago, 3 reasons you should choose Chipotle over Kava Group. That's not confirming news. So I don't see any news on this one. So I'm not super excited about it. I do like the chart though, George, and anybody that likes these kinds of charts. But if you want 90% wins, then back the trade with news. Back the trade with news. So I like it. I don't love it. If I was to do something with this, I wouldn't go to 95 at all. I would only take this one at 85. George, if you like this kind of setups, you still have a very high probability that the stock will be above 85, but don't go to 95. There's no news today to support this bullish run above this major resistance level.
Yeah, George says that there's no news / closed at a new high.
Yeah. Not good enough for me. And listen, you can trade credit spreads outside of the sniper approach. My sniper system is based on news-backed trades. Technically, the trades are really good, and they're also made even better with credit spreads, and they're made even better with a news event that tends to keep the stock from going against us. So this one doesn't have the news. So I'm not going to do it in this session. But really important, y'all. If you want to generate the same kind of results that we've been doing here, do the same thing we're doing here. All right. Any other ones?
There is one I saw. SCS jumps up on earnings and increased guidance.
Oh yeah, let's check that one out. Steelcase. Let's see. Okay, yeah, it did gap up, set new highs, coming back down. What I love about this one, and I'll look at the news here in a minute, is that this blue line here is the 200-day moving average. It's the institutional support level is the way I think of it. And institutions will not take the stock below the 200 if they're bullish on it. And indeed, the stock's come down after popping on earnings. We've got strong support here. And what I like about this, given that it's a super strong support level, the blue line, is this is interesting to me right below it. So notice 120 right here. Support, 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 resistance, resistance, support, resistance, support, 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 support. Not likely the stock will come below 12, just technically speaking. And then I'd want to check the news. And I think you just said beat and raise guidance. What is the symbol again? I just lost the symbol in my brain. What is it again, Ryan? CSC?
SES.
SES. SCS.
SCS, yeah.
SCS. And let's take a look. What are the news? They topped their Q1 earnings estimates. That's good. reports first quarter. Okay, so they beat on their earnings, and that's good news. But great news would be that they topped earnings and they raised future guidance. And if they ever raise future guidance, you usually see that in the title of the news item. And so we can just take a quick look here. Steelcase came out with quarterly earnings, 16% beating. So that was a very big beat here, 16 cents versus the 10 cents expected. So what's that, a 60% beat on their earnings per share? And this compares to earnings of 9 cents a share a year ago. So that's a really good beat. And then I'm just going to look to see if they've upgraded their future guidance. And I don't see that. So it's a good one, not a great one. And if you want to do something with that, then I would sell no closer than 12, given the strong support levels at 12 as well as the 200. So that's a good one. Not one I love, but I think it's good. It's a really good setup. And then one other that you could take a look at here is on dog food, dog treats, Chewy. And this one is exceptional. Right here, they came out with their sales numbers for the month, for last month, and the stock responded, gapped up above 25, which is a resistance level that has been in place since here. So this is September of last year. Look at that, resistance. So this is a 1, 2, 3, 4, 5. It's almost a year of resistance that just yesterday, or Tuesday, I should say, was breached on great enthusiasm. This one is exceptional. In fact, so exceptional. I know we're going late. I like it a lot. So let's see what we can get on Chewy. So with resistance or support now, resistance here became support. If I can sell somewhere underneath here, maybe down at just a little bit below this level here to give ourselves some wiggle room. And then I'll just look at these bars here, right there. If we have any strikes around 24 on this one, I think that would be a good place to sell. Not likely, for the same reason on ARM, not likely that the stock will come back down below 25. Even if it does, we're going to give ourselves a bit of wiggle room. What can I get at 24? So then I'll go to Chewy on a live trade chart here. Let's go into the trade tab and let's take a look at Chewy. I want my line in the sand's at 24. What can I get? I don't know. I have to look. All right, that's the stock symbol. I'm looking for 24. Maybe. Okay, there's 9 cents. You might be able to get, we're going to try for it. There's 10 cents. Let's see if we can get 10 cents. I don't think we're going to get it. Natural's 10. You can dance around with this and try to get a 10-cent credit. Looks like we might be able to. And I'm going to do 5 of these. And I got to move. So we're going to sell the June 28, 24 puts, buy the 23 puts, get 10 cents credit, confirm and send. See if we get this. I'm not going to play with this. Got it. We got 11 cents on that trade. What did we just do? Let me show you on Chewy. Stock symbol CHWY. And I love this one because it expires in 10 days, a week from tomorrow, whatever that is, 8 days, 9 days. We sold the 24 put for 17 cents. We bought the underlying 23 put for 6, net credit of 11. So the June 28 is the expiration date on this one. And we sold the 24 put. We bought the 23 put. We got 11 cents. And here's the rules on all of these bullish ones, in particular in this case. The most important rule is if the stock closes less than your short strike, then close the trade for a managed loss. And then the profit is handled for you automatically. by buying the spread back to close for 10% of the original credit. That would be 1 cent for us here. Good till cancel. And then again, all you got to do is watch the stock price. At the end of the day, the stock is at below 24. Maybe this is how I handle this. Just one last little tidbit is if the stock is 5 minutes, 10 minutes before the close, if the stock is under 24, then buy the spread back before the market closes, right at the market close, so that you can get out and time your exits when the stock looks destined to close below 24 in this case. All right, Ryan, anything else we could, any other questions, comments? I think we've got a couple of good trades here.
Yeah, I think we've hit them all.
Yeah, right on, brother. What are you guys doing this afternoon? You going to the beach?
Nah, I got to work.
The family's out playing and Ryan's making money.
Yeah, something like that.
All right. All right, everybody. Thanks for showing up today. 2 great trades. Have a good week, and we will see you next week. Same time, same bat channel. Talk to you later. Bye, everybody.